everybody, what's going on? Today is Tuesday, October 5th. So we had a little bit of a bounce back up. I'm skeptical of this rally. I sent out an email today to my subscribers saying raise some cash, sell into this. We were up a lot higher, and near the end of the day, near the close, the market gave some back. I want to talk a little bit about oil. Specifically, tonight we had the API inventories come out. Very interesting because, I'm sure you're following what's going on in oil with prices spiking. Europe, natural gas situation is really acute shortage. And elsewhere throughout the world, India, China, with the coal situation. But it's interesting what's happening here in the US because in this inventory report, we got the second consecutive week of oil inventories going up. They were expecting a draw, but we had a build of just under 1 million barrels. That's the second week up, and it now puts crude oil inventories at the highest level in 4 weeks. By the way, Cushing was up almost 2 million barrels, and Cushing is what the WTI contract is based on. Gasoline was up 3.7 million barrels. That was the third week in a row increase. Gasoline inventories are now at the highest level in 5 weeks, and the year-over-year deficit is pretty much wiped out. The gasoline now is down only 0.5%, 0.5% year over year. So, we had a really big year over year deficit going back a few months, and that's pretty much been resolved. That's gone. Distillate inventories were up 345,000 barrels. That was the second week up. Distillate inventories are now at the highest level in 3 weeks. So this data, at least on an inventory side, it kind of conflicts with what we're seeing price-wise in the futures markets, where there's really a strong bid, even in U.S. energy markets. Now, tomorrow we get the EIA weekly inventory and, that report from the Energy Information Administration. I want to see exports because you would think that with tightness overseas, or at least that's what I'm reading, we're going to see an increase in U.S. exports, specifically crude and refined products. If we don't see that, I'd be a little bit skeptical about this rally. I know I said last week, pump the brakes on that $90 oil prediction. Pump the brakes definitely on that $100 oil prediction. We saw oil producers in the latest CFTC commitments of traders report that came out last Friday. They were net sellers for the first time in 6 weeks. Now, 6 weeks ago, they flipped their position from net short, which basically I think they were net short for something like over a year. They flipped it to net long, and then that was just before we had this new spike up to new highs in oil. But last week they were net sellers. That was the first time in 6 weeks that they were selling into the rally. I wouldn't be surprised if we see the data on Friday and, they flip back to net short, but we'll see. So you had that going on. You have this inventory build going on. The other thing about this inventory build, it kind of hints at slower economic activity, like what I've been talking about. Today we got the fiscal flow off the daily treasury statement. It was a 16.8 billion flow for the day. That was yesterday. That's low, okay? If you think about August, we were getting 34, 33, 34, 35 billion a day. 16.8 billion. I've been calculating on somewhere between 20 to 25 billion a day. now that unemployment benefits have been cut. But 16 billion now. It's only the second day of the fiscal year. The data is not really representative right now. You got to let it, build over at least a month, I would say, to see any pattern in there, any trend in there. But that was a weak flow day. And again, that's the core of everything, the flows. And that's why I'm pretty confident when I say you got to sell into the rally. But again, like I said yesterday, and people get so, I don't know, man, so cynical and so negative. One guy saying, oh, great. I guess we don't have to worry about what's going on in China and what's going on over here and what's going on over there. We're just totally immune to that stuff. Like, come on, man. Like, tone down your negativity. I'm here trying to give you some information. I mean, what the fuck? Tone down the there's no reason for the negativity. All right? Oh, well, I guess we just got to forget about all that. Well, you know what? It's true. I mean, with the correct fiscal response here, it really doesn't matter what's going on in China. Now, I'm telling you that the fiscal situation here is decelerating. That is a potential problem. Well, it is a problem for the economy in the sense that the rate of growth is going to slow down. And yes, the stock market will reflect a slowdown in the rate of growth because that also means a slowdown in the rate of profit growth. It may also entail, like I said in previous videos, a rise in the unemployment rate. Like, we're still not seeing that effect yet. That's going to come out. Remember, I don't look at the data from like 30 days ago or last quarter. If I do, it's only to show you that, hey, I predicted that was going to happen. The flows are what drive everything. So, people, listen. Cool down on the negativity, all right? I'm just here trying to give you some information. There's no reason to come back with this negative attitude. If you don't want the information, that's fine. But there's enough negativity out there right now, for God's sakes, in this country, like I can't believe it. Everything is negative. Everything is divisive. Everything is attack this person, attack that thing. Come on, tone down the freaking negativity. It won't be tolerated. There's enough of it out there already. If you can't be positive, fine. Try to just be like neutral, all right? Try to be neutral. That would be wonderful. We don't need the negativity. Work on yourself a little bit. Work on yourself a little bit. Because you're miserable, you don't have to project that onto everybody else. Work on yourself a little bit. Tone down the negativity. See you tomorrow. Bye.